All right. Good afternoon, everyone. Todd here. Let's just make sure we're live. About a 10-second delay and we'll get rolling. Sorry for being 2 minutes late. All right, we're up. Hey, happy Thursday. So much happening right now in the market. I'm going to be taking this one solo. Um, this was one of the busiest weeks that I could remember, maybe of the year in the markets. I have so much to cover. So let's just get right in. Let me just confirm with Nick that we're good. Okay, thanks, Nick. All right, let's go. Boom. Screen share. There we go. Let me just flash those disclosures. I have to do that quickly. Got it. Let me go to the very end. Okay, so disclosures right there. There we go. Okay, have a good look at those. We are a registered investment advisor with different state and soon to be SEC regulatory bodies. So no promise of profits, past performance not indicative of future performance. This is real time. The future is very much unwritten. So just have a look at that and we will get going here. Okay. Just flip all the way back to the beginning and we'll get moving. All right. So here we go. We are Inside Edge Capital Management. We are active management, comprehensive financial planning, individual security portfolios that are managed often with the goal, the hope to minimize volatility in downturns and maximize upside, when the bull market is running, which I very much think we are right now. Okay. So today is in fact October 30th. I wanted to push this out. To 3 p.m. I just needed more time to prep. I've been working on this thing like most of the week and just hammer time last night, today. Like I said, there's so much going on in here. And I kind of like the 3 p.m. slot a little bit more. So hopefully it's all right with you. Okay. So as I mentioned, we are active management, registered investment advisor, featuring active portfolio management, fully integrated and comprehensive financial planning, which is really important for those of you who want to be involved with a wealth management shop that tries to put get on the inside edge, pun intended, and put our foot on the gas pedal when the time is right, which does come with more risk. And that's why a good financial plan understanding of how you bucket out and compartmentalize all your trading accounts and for what purpose they serve, the risk that we should take in order to hopefully put ourselves in a position to reap those rewards. Like a good plan is tax strategy, conceptualization of risk is super important. And that's why Kyle does what he does, which allows me to do what I do. Okay. All right, so here's what we're going to cover. We're going to hit all of these. I'm not going to read them, but we're going to hit all of them step by step. There's a lot going on right now. Okay. Oops. Sorry, one sec. Canva's been acting weird lately. I don't know why. Come on, Canva. Okay. There we go. All right. So the first thing was we started out the week with a meeting with President Trump and President Xi. So obviously they've been going back and forth, and basically what they're doing is, Trump's trying to decide the tariffs between 57% to China to 47 in exchange for some lifting of restrictions of rare earth minerals, which we'll talk about on the next slide. Obviously, Trump is trying to also reduce the shipments of fentanyl coming into this country. So what she is holding over her heads for the rare earth minerals, which we'll talk about in the next slide or two, Trump is holding the export of semiconductors into China. So that's the big thing that's going on here. We also have a big soybean purchase going on that is part of the deal. But Trump came out of it with a very positive tone, which is on a scale of 1 to 10, he said the meeting went as a 12. Okay, so the start of the week was very strong based on this. Okay, now what happened here is, and I kind of wrote this out, there's so much to kind of remember. I hope you don't mind me reading, but Trump is negotiating with Xi to ensure a steady flow of rare earth materials to the U.S., right? They have, a monopoly on the rare earth mineral trade. We are funding this company, which is MP Materials in, I think it's called Mountain Pass, California. So we're trying to bring them online as quickly as possible. And there's other rare earth mineral companies in the US. And I have 6 charts here showing basically what is happening is, we're trying to come online and become self-sufficient with these rare earth minerals, which are so key for the production of everything to do with defense, with semiconductors, with EVs, like they're in our phones, like they're a key critical component, and China has a monopoly on the export. So we're heavily dependent on Chinese exports, these materials, their dominant processor and exporter in most cases. China agreed to pause export controls for 1 year, but is openly hesitant to go to unlimited exports due to national security leverage protecting their domestic industry and internal demand. So this is what happened if Trump got them to pause the export control on the rare earth minerals from China into the U.S. As you'd expect, these are the North American rare earth mineral stocks. You can see what's happened to them. They had a great run up, and they've come off quite sharply. We hold MP Materials. I cut it in Active Opps, which is our speedboat portfolio. We still hold in TAG. And while we're above $60 support in MP, I still like the prospect, but I really do want to see it bounce from here. Now, what I'm thinking is, and it's not like this is, super in-depth insight, but with President Xi giving up, putting on the restriction of 1 year export of rare earths, I'm sure Trump is working the same with allowing our major semiconductors to begin exporting to China, which drastically increases the TAM, which is the total addressable market. How exactly he's going to package that, or what version of the NVIDIA GPU is going to go to China, we'll see. We don't want to give them our best and brightest because, that becomes potentially a security issue. So really want to see, but aside from the risks, if Trump does open up that market specifically for NVIDIA, which is yet to report earnings, like the TAM, total addressable market of NVIDIA, expands significantly, and so will the profits of NVIDIA. So we'll see how that goes. All right, now this section took a much bigger, a lot more time and a bigger chunk of the presentation than I want, but it's so significant. There's this guy, Brad Gerstner. He's a big hedge fund guy. He runs a fund called Altimeter Capital, and I follow his 13Fs every time they come out, which are the positions. And I think he's smart. He's really good. And he's doing this really good podcast. If you want to get in the inside of technology, check it out. It's BG2 Podcast. So he's got Jensen Huang, which is the CEO of NVIDIA, which, did you know, by the way, I don't know if a lot of people know this, his cousin is Lisa Su, who is the CEO of AMD. Pretty cool. I don't know how many second or third cousin or whatever it is, but they are related. Okay. So on the podcast, and Jensen and Brad said this, and I don't want you to think this is a political statement. This is just fact. And this is what the CEO of the largest company in the world, and arguably the most important company maybe ever since Ford took us off horses and put us into automobiles. It was almost impossible to get an appointment in DC in the past. President Trump is an open door to leaders who want to come in and help them understand the future. This is an administration that believes in growth. Fundamentally, Trump wants America to grow. If we can grow economically, we will be strong militarily. He also wants America to win the AI race. He wants the world to be built in American technology and American AI to be coveted in trade, which is something that obviously we can use in exchange for trade of things we want from other countries. So, this is quite a bold statement, and there's plenty of TDS out there, Trump derangement syndrome, who are making people stay out of the market, who are missing life-changing gains right now, which is really unfortunate. You've got to be able to separate your political biases and leanings from what's happening in the economy and the market, because many times they're very unrelated, and at times there's correlations, but they're very short-lived, no matter what you want to think. So this GTC conference in Washington this week, the NVIDIA's AI conference, was unbelievable. And, it's about 2 hours long, and I've been piecing my way through it. But just talking about, the future and what AI build out is going to look like, according to Jensen Huang, which again is CEO of the most transformative company potentially in history, certainly one of the fastest growing, I would say. So he was saying CapEx, capital expenditures, which has been the big focus for, how much these hyperscalers are spending in order to build out their AI infrastructure to grow into the future. CapEx spend by cloud service providers, Amazon, CoreWeave, Google, Meta, Microsoft, Oracle, expected to increase by 50% from 2025 to 2027. So 2022, 126 billion, 133,270. Here we are here at 443, 549 to 632 billion, which is about a 50% increase over the next 2 years. And he's making the point that general purpose computing is scaling off while accelerated computing is changing. And basically what they're doing is they have to take these old Intel CPUs and replace them with the accelerated computing, which is GPUs, and the amount of infrastructure that needs to be replaced and upgraded, and the efficiency and the productivity ahead of us is it's massive. Okay. So he goes on again in this Washington speech, and he says on energy, and this is interesting too. And this is a really important lesson that I'll talk about in a sec. There's another area where our administration deserves enormous credit. Like Jensen Huang, head of tech, which is normally, not very much in line with Republican leadership. Jensen and Trump are completely on the same page, which, yeah, kind of makes me nervous. And, Trump doesn't have a great history of keeping friends long term, right? I'm just thinking about what happened with Elon. I don't know. But right now, Jensen and Trump are right on the same page. And he's saying this is another area where administration deserves enormous credit. His pro-energy initiative is recognition that this industry needs energy to grow, to advance, and we need energy to win. His recognition of that and putting the weight of the nation behind pro-energy growth completely changed the game. This didn't happen, we would be in big trouble. I want to thank President Trump. I mean, how much is he trying to get Trump to open up the Chinese market so NVIDIA can increase their total addressable market? I don't know. Maybe it just really is a true patriot. We'll see. But the aligning of the two is striking. And if you get inside and watch that GTC conference, watch his keynote address, as I wrote on Twitter/X, watch this NVIDIA GTC keynote from Jensen about how imminent and frightening, literally it's frightening, the future we're going towards. It's crazy what's ahead of us. The future of accelerated compute is. Boy, that's not good English, Todd, but that's right. Just mind-blowing what's happening at 32 times forward gap earnings from NVIDIA, which means it's not expensive even with the growth that we've seen. So if you get inside of this and you just see the stuff they're building, the layers of compute, the vision that this technology is promised to bring to us, if it hits even half of what they say is going to happen, it should carry equity prices significantly higher. And if it doesn't, if it fails and it winds up being a lot of hype and hundreds of billions of dollars spent on hardware that is not generating profits, it's going to be a spectacular sell-off. So there's significant risk, but there's significant reward. So this is not a market where you want passive money managers who say, just stay the course, just let it come back, let it drop, it'll come back, just relax. Okay. Okay. So NVIDIA did break to new highs, and it was kind of cool because at the same time it was moving above the $200 resistance level, it was breaking into the $5 trillion market cap level, which is amazing. So, I mean, you can see that NVIDIA, this is a weekly chart, pretty much since, going into the summer, May, June, July, August, September, October. I mean, call it 4 to 6 months, we were sideways in NVIDIA, and then just this week, boom, up through 200. It was a pretty spectacular move. And, I started having some fun on social media. I was like, okay, so $5 trillion market cap. Of course, you got to put the Dr. Evil in there. Like, what does $5 trillion actually mean? Well, let's look at that in a sec. But, here's NVIDIA's market cap. It got up to 5. We've backed off a little bit. I think we're at 4.9 something. Right behind that in blue is Microsoft, which is doing really well. Purple is Apple at 4 trillion. Blue should be, so what do we have? Orange is Microsoft. Purple is Apple. Blue is Microsoft. Green, which is Google, has been ripping lately. I didn't include this in the presentation, but so many people, myself included, said Google search is probably dead. Well, there's stats in the latest earnings out of Google that's not the case at all with ChatGPT. Like, it's actually doing fine. So it's interesting. And then what's this color? Oh, this is Amazon. Amazon's lagging. Purple is going to be Meta. Meta just reported earnings. We'll talk about that. That one's not doing so well. And green is going to be Tesla. So you look at the difference from 1.48 trillion to 4.9 in the Mag 7. Okay. So market capitalization, just a little review for you of shares outstanding, times your share price. How many shares out there times share price is your total market capitalization. This is sort of a little ancillary add-on chart, but I found this interesting. This is the amount of share buybacks. So, the companies, with the Justice Department and the size of these Mag 7, it's not like they can go out and do a bunch of acquisitions because the Justice Department will get in there for monopolies. So a lot of times what they do is they pay a little dividend or they just buy shares back. And the thing that I like with NVIDIA since 2024, look at the orange in terms of the rate of change in share buybacks in NVIDIA versus everything else. Apple's right here. Apple's always been a really good, had a really good share repurchase program, which takes supply out of the system, which increases demand, right? And boosts the share price. Everybody else has been mostly flat. Tesla, Amazon, blue is Microsoft. Purple, what's purple? Purple's Meta. Purple does some share buybacks, and it looks like Alphabet is starting to kind of round over there, but it looks like Apple and NVIDIA are the most active there. Okay, so also, let me pull this out. I'll come back to that. Also at this NVIDIA conference, he made an announcement with Alex Karp, who I really like, who's the CEO of Palantir. So it's like, oh my, this conference was just crazy. So Palantir, is known as a software company, AI-enabled software company that has a lot of government contracts for military, but actually, if you look inside the fundamentals, it's like revenues attributable 50-50 private versus the public sector. And this interview that they did on CNBC with Christina Partsinevelos, who I know, it's not showing her there. She did a really good job of the interview. She was like, I mean, it was unbelievable how much Alex Karp was focusing on the private sector with how much Palantir powered by NVIDIA GPUs is going to increase significantly the decision-making process for corporates out there in many different applications. And Palantir also, which was very quiet from the summer, also broke through resistance, which is interesting. It was like just shy of 200 itself. I think resistance was whatever, 180-ish, 185, whatever. We're trading 196 on the way to 200. And you look at the earnings, the valuation is kind of absurd in Palantir. And yeah, it's nervous, but I'll tell you what, this market isn't trading based on how much the company's earning, which is the EPS this year, or the earnings per share for next year divided into the share price, which is the forward multiple. It's trading on top line growth. It's trading on revenue growth. And whether that ends in tears and blows up, or that's a reality for a while, we shall see. That's why you have to combine the fundamentals and understanding the numbers behind your investments, but you also have to watch the technicals to see where the volume's coming in, how price is behaving in reaction to these news events that come out all the time. So it's a combination of technicals and fundamentals that I think is extremely important to be a successful investor in this time, in these days. Okay, it could change, and it probably will change at some point, but probably not today, probably not tomorrow or next week. So you look at Palantir, so I'm not so much worried about EPS on the annual. Look at sales. So in 2020, they're doing $1 billion in sales, 1.5, 1.92. Look at these percent growth. And then all of a sudden this year, next year, they're starting to go from $1 billion in sales to 2 to 4 to 5 billion in sales. I mean, that number can easily be revised by analysts, 6, 7, 8 billion. I mean, this company, if it really goes in and penetrates the private sector and focuses on empowering businesses for decision making, this could be the software of NVIDIA, like equivalent of NVIDIA. The earnings are not there. They've been negative annual EPS, earnings per share, from 18, 19, 20, 21, 22, turned profitable in 23 with a little profit. But look at the percent increases you're seeing: 149, 111, 131, and then only calming down by 40%. So up to 62 cents. The company was losing 27 cents in 2021. They're going to make 62 cents in next year. That's a significant swing. So again, fundamentals combined with technicals. All right. This is kind of funny, and I won't spend too much time on this one, but in the GTC conference, Jensen comes over, and that's Brad Gerstner, the guy I was telling you with the BG2 podcast that I really like. He interrupts him. And you know what he does? He brings over, I was blown away. He brings over like 6 Saratoga waters. And I was like, sweet. Being that I'm here in Saratoga, I'm proud upstate Saratoga, ex-New York City, New Jersey, Wall Street guy, came up here for the calm, good life. And I was like, yay, Saratoga water. And by the way, that company was acquired by Primo Brands, PRMB, I think is the company. Primo Brands. It's actually good looking stock. I think it has like Poland Springs water. I think it has like Deer Park or whatever. Like a lot of the water brands that is owned by Primo Brands. So check that out. So kind of had fun with that one. And like I threw a tweet out there. I was like, hey, Jensen Wang was talking about Saratoga water, and Saratoga water wrote me back. And I was like, hey, I don't know if you knew this, but I got the chance to heckle Jerry Seinfeld. So he was up here in Saratoga for the summer, and he's doing this whole bit on, he's like, you got to stay hydrated. Stop.
Do you know that Saratoga?
And he's like featuring Fiji water the whole time. And everyone's like, what a dork. Like, obviously you didn't prepare yourself, and know Saratoga is very proud of her Saratoga water. So he's taking questions at the end, and I got to kind of heckle Jerry Seinfeld, one of my proud moments.
What's the question? Do you know that Saratoga has the best water in the country?
And there's like 10,000.
Do I know that Saratoga has the best water in the country? Of course I know that.
You do? Why are you drinking Fiji?
You, like me, have tried every water everywhere in the country, and it's so easy to tell with water when one is better than another. It is. I've had Saratoga water. Same goddamn water. As
He goes,
No!
He goes, it's the same goddamn water. The whole crowd was like, ooh, it was kind of fun. But anyway, so anyways, back to NVIDIA, and then let's branch out to Mag 7. Like with this market, like we're seeing the Mag 7, Magnificent 7 start to lead the broader market again. Whether that's good or bad, we shall see as we're heading now into the heart of earnings season we'll talk about. So this is the ETF that is tracking Mag 7, okay? And you can see it, obviously, MAGS did break out. And particularly what I'm looking at here is the relative strength. We're looking at Mag 7 compared to the S&P. And Mag 7, S&P were just flat here. But then as we broke up, what this means, broke higher, is the Mag 7, which is a significant portion of the S&P 500 because it's cap weighted, also moved up. So it meant the 7 massive hyperscaler stocks, Amazon, Google, Meta, Apple, NVIDIA. I can't believe I can't name the Mag 7 right now. It's terrible. Whatever. They're leading on the upside. This is a relative rotation, same kind of way to look at it. This is the Mag 7 rotating on a clockwise basis. As you go clockwise, you're outperforming the benchmark. And we started to roll over here in the last 2 weeks, but we're starting to get a little bit of a hook back to stay on the right side, which is outperformance. Okay, so large caps are leading. So it's Microsoft, Meta, Google, Amazon, Apple. And so far what we've seen is 3 have reported, okay? Tesla and NVIDIA are not shown here to complete out the Mag 7. So by tonight, 5 of the 7 Mag 7 will have reported. So far, so good. These are the earnings last night, which was Microsoft, Meta, and Google. Tonight, we have Amazon and Apple reporting. Now, Microsoft came in, they beat expectations, 77 billion, 4.13. The greens are the beat of expectations on revenues. And over here is how much they exceeded expectations based on earnings or EPS. So all good. Meta got slapped around right here, and it was interesting. One, this is a little inside chart of Meta. It's been underperforming for a while, and I'm sorry I don't have the scale on here, but I think this is probably going to be July, August, September, October in here. So Meta has not been in gear anyway. So a lot of times when you see a stock underperforming like this, heading into earnings season, like it's the market discounting or having a feeling something's going on here. So what happened with Meta is they were concerned about the increased CapEx guidance. So the increased capital expenditure guidance. All right. And there was a little bit more in here with a one-off tax bill. And this gets a little convoluted, but here's a note that I sent out to everyone who's on Savvy Trader, which is our subscription product. Anybody who's an investor at Inside Edge gets this for free. Investors, if you don't have it and you want it, please email into Nick, info@insideedgecapital.com. So I'm just going to read here. Solid earnings beat last night. Bottom line beats Microsoft, Meta, and Google. Meta lower while Google's trading a good bit higher. Digging into Meta report here a bit, it looks like non-GAAP EPS crushed expectations of 667 with a reading of 725. So they beat expectations of non-GAAP. Okay. In the earnings report, which this is a screenshot here, okay, in GAAP earnings, they got hammered. They only made $1.05 per share, and they were expected to make 105 GAAP earnings. Are expected to make 670. Oh shoot, sorry. Expected to make 671. So it says in really small print here, something to do with the big beautiful bill and a one-time income tax hit crushed their GAAP earnings. Okay, so a combination of that plus the increase in CapEx guide. Meta also upped their CapEx forecast for the year 72 billion from a prior figure 66 to 72. The company was hit with a bunch of downgrades as well and is trading in pre-market below the October low. Not a good look, but we've seen this movie before when Zuck was one of the first through the CapEx brick wall on the street. Kramer, remember Kramer was crying about Meta, crushed him before it. But only now do we look back and realize it was the right move that kicked off the CapEx spending move to build out AI infrastructure. So it's like if you guys remember, Meta got crushed and they were spending a lot of money as they started building out AI, and like the world was losing their mind because they didn't see anything this before. And then Meta was rewarded because the stock ripped because they were spending. And then the rest of the hyperscalers began to build up, build out their infrastructure. But here we are at it again. They're worried about the spend, which again, this pretty much goes into NVIDIA and their related partner companies' pockets, which NVIDIA earnings will come out here in a couple of weeks. So, I mean, that's why Meta got hammered. But, you look at all the numbers, aside from that one-off tax hit to Meta, like they're beating earnings. It's good. So we'll see what happens with Amazon and Apple. Apple's going to be wild. Apple made a new high. We looked at that. The iPhone 17 upgrade cycle has been real. And you look at, again, what are we looking at here for Meta last night? We're looking for $49 billion in revenue, came in at 51.24. EBITDA, 29, came in at 31. EBITDA margin, 60.12, hit it, 60.6. EBIT, earnings before income and tax, beat. EBIT margins, beat. Net income, beat. Adjusted EPS, 725, expectations 667, but GAAP, which includes that one-time tax hit, was a big miss combined with CapEx. So I'm going to watch. I'm going to talk about a rebalance I'm going to do in the Inside Edge portfolio coming up, but I'm going to see how this thing handles this pullback. Do we need to reduce our exposure in Meta? But I'm not sure yet. We're going to take a look, okay? All right. Let's shift over to Fed. Okay. All right. So this is the other excitement in this week. Holy bananas. Oh, by the way, those of you who have kids, or even if you don't have kids, do we feel like Halloween is out of control lately? Like, it's a whole week. It's so freaking long. Like, there's so many parties. There's so much candy. Like, the kids are wearing their costumes all over the place. Like, can't we? It used to be just one night and it was over. It's just my wife and I were talking about it. It just goes on and on. It's like Christmas or something. Okay. So Powell in the Fed meeting this week gave us a little nasty trick or treat. And basically he's like, yeah, everything's good. Economy's fine. Labor market is softening, but it may be the new normal because of immigration policies, because boomers are retiring out of the workforce. AI, technology is displacing a lot of workers. Like, it might be the new normal of low employment numbers. But he's like, oh, but you know what? Remember that December rate cut that we talked about? Here, hold my beer. And he's like, this is not a foregone conclusion at all. And the market got ripped. So the volatility you've seen over the last 2 days, which feels like a week, was because of that. So the Fed fund futures, let me just make sure I have this right. So the date is the 29th. Today's the 30th. Literally, it's felt like 2 weeks of markets. So the Fed funds going into the announcement yesterday were 4 to 4.25. This was as of October 29th at 6:48 Central. So this is after the Fed had their meeting. All right. 2 days ago, on October 28th, there was a 90% chance at the December meeting that we were going to go down to 3.5 to 3.75. 90% chance. And it went to 0, like no shot. There was, the day before the meeting, there was a 9% chance that we were going to stay at 3.75 to 4.0, 9%. And then yesterday went to 67. Like, December rate cut came off the table real quick. So since then, the market is stabilized. This is a screenshot of the same thing today at 11:07 Central Time. Which is what, 12:07 here. So now the Fed fund futures, our new normal is 3.75 to 4.0. That's the target FFF, Fed fund futures level. Okay. Now they're starting to put the December cut back on the table. The December cut would bring us down to 3.5 to 3.75. So, it's saying a day ago, it was 66% chance of happening. A week ago it was 91, and now it's back up to 72. So I guess what you're saying is basically 70-30 that we're going to get another rate cut. Like, so, but like Powell was pretty aggressive, and he said, I would not count your chickens on that. So it kind of sent the market into a tizzy. So what we're looking at here, again, the new normal, the new target range is 3.75 to 4.0. So we're looking at a 72% chance on December 10th, which, you know, is not that far away, going down 3.5, 3.75. On hold, the odds say we're on hold in January of 26, on hold for March, one cut in April, and then another one in July of next year. So the market is pricing in one cut this year and two more cuts next year. We'll see, man. That could change without a doubt. That can change. All right. Okay, so what happened on the market's point of view? I mean, this is kind of going back to my hedge fund days on Wall Street when I was trading FX during the global financial crisis, housing collapse. Man, it was wild. It was such a good front row seat to see how like all the major asset classes move together. If you're an equity trader, there's times where you really need to know where currencies, commodities, and fixed income are going because they have a big impact on equities. Other times they don't, but sometimes they do. So what happened here right after that Fed move, I highlighted the daily bar yesterday. So what happened is the 10-year bond futures went down. And if you remember from your economics class, bond prices down, interest rates up. So because Powell's like, yeah, psych, just kidding on the December rate cut, the bond market sold off, which means the interest rates correspondingly went up. The 2-year, which very closely tracks Fed fund futures, also went down. The dollar went up. The gold market sold off. I actually put a little short gold position on in our Active Opps. I might have to cut that soon. It's not really working. But all of that is generally not good for the stock market. Lower bonds, higher rates. Lower bonds, higher rates. Higher dollar, generally not good for the stock market. And gold market lower confirms these other three intermarket moves. Generally not a good thing for equities either. Okay, there's generally a positive correlation between gold and the stock market, which makes no sense if you pick up a traditional economic textbook, but that's the way it is because gold is trading inverse to interest rates and the dollar. Interest rates down, dollar down, that usually equates to gold and equities up right now over the last couple of years. All right, so this is the 10-year bond rate. So this chart is exactly opposite of this 10-year bond future chart, 10-year treasury. Okay, I should say treasury, 10-year treasury. So it was the 10-year treasury was going to 4.3, 4.2, 4.1. It dropped below 4. And then yesterday, it like ripped back up. It went into the 50-day average and is kind of hanging out here at 4.0. Basically, I think with the strength of the economy, the earnings that we're seeing, we should have interest rates of 4%. Like, hopefully, you know, we could just stop talking about it because we've been talking about it for years post-pandemic because those intermarket relationships were so important. Like stocks were hugely impacted where fixed income and currencies, particularly the dollar, were going. So, you know, maybe we could just go into a 4% range and fixed income and just forget about it and the stock market can go on its way. That'd be great. But we'll see. Okay, so good news is mortgage rates are dropping and we're hitting the lowest level in I think about a year. So the 10-year treasury yield, which I just mentioned, has a huge impact on the 30-year mortgage. So in purple is the 10-year treasury. You know, as I showed you, we got just around 4%. And you can see the correlation with the 30-year fixed mortgage. You know, like why would the 30-year fixed mortgage have, you know, be so impacted by 10-year treasury? It's just the way it is. So I have a spread here between the 30-year mortgage and the 10-year yield. 6.17 minus 3.99 is what, 2.18? Yep, exactly, 2.18 right there. So, you know, the higher we get on this scale, you know, the bigger the spread, or the lower we get, the bigger the spread. The average over the last, what is that? Probably what, 20, 45, 50 years. The average spread is about negative 1.8, we're at negative 2.18. So you might say we have what, 17 and 18, 35 more basis points or 0.35% to go, which would be the closing of 10-year treasury and 30-year mortgage rate to get back to average, which I would say that the spread between these two is mean reverting, right? You get overbought, oversold, overbought, and you would probably try to gravitate towards the average. So, maybe mortgage rates drop. New guy who's working for us just got a mortgage to buy his new house. He said he got 5.99, which is really cool. Y charts is showing us the average is 6.17. So you can see the mortgage market index has certainly come back here, 24, 25, May through September. The refinance markets are certainly refinancing. I know houses are moving quick. So the housing market is loosening up here a little bit. And it's gonna stall out, I should say, if that 10-year yield just stops at 4%. I think people are buying houses now in anticipation of be able to refinance at lower rates. But if those lower rates don't materialize, I'm sure the mortgage activity and housing market will slow down, but we shall see. All right, that's that. Getting to the technicals. So, this market has just been absolutely ripping, right? April lows, we had one little check back April, May, but it's just been straight up June, July, a little sell off in August, a little bit of a nod to the big sell off we had last August. And then it's just been, couple down days up, couple down days up, couple down days up, one down day, few inside days up. Like, there's been no entry into the market except for any pullback towards the 50-day moving average. And this is just the oldest story. Like, there's so many people who are so influenced by what's going on in the political realm or something that they don't like about the direction of this country, and they're taking it out on their personal finances and their family's future and their health and their wealth more so, and missing out on significant returns, which is really too bad. So the S&P from the lows is higher by 42% from the April lows. Like the US stock market, which is multiples more than the closest stock market, total market cap, like Hong Kong, Shanghai, France, Germany, like the whole thing's higher by 42% since the April lows. The NASDAQ, how about 57%? So, and I know it's not just individual investors. There's a lot of hedge funds out there who are waiting for some kind of pullback, who are getting really nervous because they're underinvested and they are sweating their end of year bonus for their performance. So I still think that there might be a melt up as retail investors and institutional investors, hedge funds, rush in to try to get some return into the end of the year to make something of a bonus for themselves, and that could result in a melt up. I'm going to be taking it day by day, and we'll see. And it's not a prediction. It's just, I think, a distinct possibility. One thing I'm worried about is as the S&P is moving higher, the VIX, I don't love this really big spike in the VIX, the volatility gauge. That was a big spike up here in October. But what's happened since the summer is we've made 3 higher lows in the VIX, where the stock market has made 3 higher highs. I guess you'd actually say that's 4. So 1, 2, 3, 4. No, it would be 3 because this is a high. That's your first higher high, second higher high, third higher high. VIX makes a low, and because they generally trade inverse of one another, we'd expect the VIX to be making new lows, but it's not happening. So there's some nervousness out here. This doesn't necessarily mean we're going to see a significant sell-off in the market, but it's possible. So we could go higher or lower from here. I have no idea. Nobody knows. That's why you got to take it day by day and just use, all available information that's in front of you to make the best decision with your portfolios. So, but that's something we really gotta watch out for. Okay. Again, I wish I had questions up, but I just don't have that. Oh, here we go. Do I have questions? Anything you guys want me to cover? I think I can look at YouTube questions. Okay. How are we doing? You guys good? You awake? Is this helpful? Is this craziness? Is this tell me what you think. So ASML, let's start looking beyond the Mag 7, beyond the macro, beyond the stock indexes. A couple new positions that we looked at. I did add ASML. This is a Dutch-based semiconductor company. Particularly, they do something called lithography, and I'll explain what that means. So we added it to our Active Opps portfolio. Active Opps portfolio, to remind you, that is a portfolio that we use as a very active, high frequency in and out sort of speedboat portfolio where, we got all kinds of stuff flying around here. So we added ASML based on this breakout through 1100, which I am looking to add to TAG, which is our growth portfolio. So ASML, what's going on here? Okay, I wrote this article for CNBC. I read a weekly article for them. This was on the 28th. So ASML, we're looking at a breakout through 1100 all-time highs. And I just want to read it to you quickly. It's a pretty involved description. I just want to get it for you. A very interesting nuanced area of the semiconductor production process I want to focus on is lithography. So think of it in this analogy. I named my company Inside Edge Capital Management as a reference to my college days as a D1 ski racer. In ski racing, hundredths of a second matter. Like you can have the top 4 or 5 spots, defined by 0.2 or 0.3 of a second. So what we literally would tune our skis with like high precision diamond tuning machines to give a very precise edge. And also we'd have a particular angle on the edge. It wasn't just a 90-degree angle. We'd make it like 88.5. We'd put a base edge and a side edge, and we'd make like, 88, 87 degree, more of an acute angle to bite into really sharp courses. So the analogy I was using is lithography is the semiconductors industry or equivalent to cutting a fine and precise line into semiconductor wafers. A wafer is that circular slice of silicon that serves as the foundation on which semiconductor devices and integrated circuits are built. Literally, they like use light in this different process to etch into the wafer. And like as the semiconductors get more refined, like 5 nanometer, 3 nanometer, so on and so forth, like you really need to get very precise with this etching process. And ASML has monopoly on that lithography process, which I think takes a super long time to build out the machinery to do that. So the more and more I dove into this, I was like, oh, ASML, it is arguably one of the most important companies in advanced semiconductor build out. I mean, they empower a lot of the major semiconductor producers, Taiwan and NVIDIA and AMD and Broadcom. So it's pretty interesting. They did have a problem with China. They kind of got blacklisted, I think, by the EU and the US government. But I think the EU sort of made some sanctions or made it so that ASML was not selling to China. And it was sort of a big problem. So they were in the penalty box for a while. But that has been since resolved. And ASML is now moving up. Okay, we just kind of look at some of the numbers here for ASML. So annual earnings, I believe this is a Dutch-based company, so they report in euros. So they're going to be susceptible to FX, but that's okay. The expectation for 2025 is to grow 45%. And then 2026 seems a little light to me. I'm looking for those numbers to be refined up. Annual sales, look at the growth here. We grew 6%, 34%, flat in 24, looking to go 29% in 2025, and then 4%. So, this is a $356 billion company, so it's certainly not small, trading 37 times forward earnings. So you take expected EPS earnings at $29, divide that into 1,100 share price, and that's going to give you forward earnings at 37, which is not really that expensive. The S&P overall forward earnings like 22 or 21 right now. So not overly expensive, and I do like the little flag consolidation here, potentially in a wave 3 that should bring us up. I'm thinking 13, 1,400, maybe even 1,500 upward channel there in ASML. Another one, this was a fun one. This is one we've been talking about, Bloom Energy. So Bloom is literally like a co-located energy production system that's off grid that uses natural gas. They use hydrogen, biogas to create 24/7 electricity that is literally co-located next to these AI data centers that is off grid, meaning they're not tapping electricity from the grid, which is limited in order to power AI data centers. And like, this is one of the best, I think, ideas out there. They came through and just absolutely crushed earnings. So the earnings most recently was a 15-cent gain, which was a 1,600% increase from the same quarter last year. Okay, so GAAP, they were not profitable. They lost 10 cents. Generally accepted accounting principles, they lost 10 cents. But non-GAAP, they made 15 cents, which was a big, big beat. Okay, and let's look at some of the growth figures here. Sales growing 23, 11, 10, and then look at growing 27, 25% over the next 2 years expected. Look at the earnings, looking to swing into profitability next year for Bloom Energy. So this guy broke out and things been an absolute beast. So we added this, we have this in Active Opps, and we woke up, I think yesterday morning with the stock up 20%. So that was a fun one. Now I just want to say, like, I don't sit here and say we only make profits. Like, I'm having kind of a rough day. I'm down 2.9% today in Savvy Trader. I'll show you right here, live position 2.95. So not having a fun day, but you know what? This is a volatile portfolio. You look at where we are since inception, compare it to the S&P, which is always the benchmark, and that's where we are. What, I guess 46% compared to the S&P's 31. We're going to be down 2-3% today with 6 minutes to go on the close, but that's okay. That's life in the NFL. Okay, so let's keep going. That's Bloom Energy. Oh, totally off topic. Not really, but this is a fun one. Circling back to the macro and sort of this deregulatory push that we're seeing in the U.S. I've been following the election in Argentina, and this president, Javier Milei, I think he was elected in 2023. He was a libertarian. And as I wrote here, launched a libertarian movement, won popular support with his free market agenda. He was an economist. He was TV, outspoken critic of Argentina's political establishment that put the country in economic. I didn't write this, actually. I wrote it. Oh, shoot, I didn't source this. Actually, I did write this. Never mind. I did write this. I pulled it from another slide that I put out there, and I just want to make sure I didn't drop the source, but I did write this. Formerly an economist and TV pundit, outspoken critic of Argentina's political establishment that put the country in economic distress with massive inflation, economic weakness. He won the presidency in strong majority in 23, and then he's enacting austerity measures, cutting government spending, reducing ministries attempt to lift currency controls, price controls, and find fiscal discipline. Trump endorsed them. And the IMF and Trump gave Argentina, which was suffering from significant inflation, economic weakness, a $40 billion lifeline to support their currency and the economy. He won the midterm elections. His party now got like 40-something% of the popular vote, which gave him the majority in Congress, which is only solidifying the libertarian sort of pro-business build out. And Trump backed him, and it's just sort of a it's a smaller example that it seems to be that the shift in paradigm is towards sort of what taken from right here. Oh, man, I should have sourced that as well. That's not good. That's not Axios. I'm going to have to source that in the notes. But so it says here, Milei takes deep chainsaw to bureaucracy, red tape. Argentine President Javier Milei has lowered inflation, drastically reduced government spending, dismantled large parts of the federal bureaucracy. One of the most far-reaching efforts by his administration has been its deregulation push, with officials implementing about 2 regulations per day since he took office. So, this is sort of the austere approach, fiscal responsibility, reining in spending and focusing on the private sector to grow your way out. The Argentine ETF, RGT, was up 20 something percent after those elections this week, and it was on massive volume. So, it's kind of it's a win for Trump because he did back Argentina, and I know they're also talking about importing Argentine beef, and there's a big sort of uprising in the U.S. with beef producers right now. But this was sort of interesting that again, Trump's message is kind of started to take root around the world, and we can certainly see some success here. So not a political statement, that's purely a business statement. So there's a lot going on. As I said, I'm still incredibly bullish. I'm getting ready for a new rebalance, reallocation of the inside edge portfolios for this coming week. So I'm just showing you the sector allocations for our two flagship portfolios, which are TAG and SIG. So this is the growth portfolio. We're competing with the NASDAQ, and then SIG is the income portfolio, trying to compete with the S&P. Everything we hold in there does pay a dividend. We're holding 59 individual positions, and this is just what we did last time. Cut 10 positions, added 7. TAG, holding 48 positions, cut 13, added 15. So that was actually a big rebalance. I won't have that many this time. But, just kind of talking about the process that, I go through. I'm just trying to give some transparency into what we do. So I put an X post out there, getting ready for a full portfolio rebalance, reallocation, and inside edge for 2 flagship equity portfolios, a total of about 95 individual equities between the two. Here's a high-level look at the 8-step process. So one, we look at the macro, and that's what I'm talking about with the 4 major asset classes, which are equities, fixed income, commodities, and currencies. Particularly, I want to see how those 3 asset classes impact the equity markets. And the degree of impact varies from what kind of, macro, geopolitical influences, business cycle. The correlations come and go. Then what I'll do is I'll look at the technicals of the stock indexes. Are we, based on what we know, what impact commodities, currencies, and fixed income have on equities? We then look at the technical position of the S&P, the NASDAQ, the Dow, and the Russell. Like, how does the overall stock index look? Is it generally in a bullish trend? Is it in a bearish trend? Is it against resistance? Is it showing divergence? Do we have a VIX divergence, volatility index making higher lows while the S&P continues to go? All right, all of that's going to factor in as to how aggressive we get. And if I'm late stage bullish in the market, I'm not going to have as high allocation in the offensive sectors like technology, consumer discretionary, communications, some staples with the AI infrastructure build out, and some energy and utilities, which are power plays with AI. I'll scale back the aggressiveness in those if I think we're late stage in the bull run and equities, again, to the degree that rates, commodities, and FX impact the stock market. Okay, so then I'll set the allocations for where I want to be for the 11 sectors that make up the S&P. All right, so what do we want to increase or decrease in terms of exposure based on what I just said? All right, next step is I go into each individual stock and I look at the technicals, I look at the fundamentals, almost separate from the prior 3 steps, and I say, do I want to cut this stock? Do I want to, do I not like the fundamentals and the technicals? Do I want to cut that stock? Do I want to keep that stock, or do I want to increase that stock? And I'll go and make little notes against each position. Okay. New ideas that are not working are cut to generate taxable loss to offset taxable gains that we've taken, right? So I love cutting losers, right? And one thing that, I think separates, traders who've done this for a long time is like, when I was working on Wall Street and I was writing, a daily actionable newsletter for traders that went around the world, like I hated putting on losing trades because I was wrong, right? And you felt like you were a failure, and you kind of went home, and if I had a dog, I would have kicked it. No, not really, but it's you feel like you missed something and you feel bad. If you do this long enough and you learn from professional traders have been doing a lot longer than you have, and you yourself, now I've been doing it for 20 something years. Like, losing trades don't bother me. If I followed the process, if I didn't miss anything, sometimes things just don't work. And you know what? Just cut it, forget it, because you're just that much closer to your next significant winning trade. Like, I don't mind taking losses. And, you know, now we're managing tens of millions of dollars on the way to 100 million next year. That's the goal. Like, you know, and you think that, you know, I'd be nervous managing that kind of money. And it's just the process. It's just percentages. Like, as long as you follow your process, it doesn't matter what the numbers are. And I don't mind putting in losing trades. I like taking little losing trades because that means I can build up little capital losses, you know, against which we can offset a big capital gain that I have to take off inside of 12 months because the stock is so overdone, right? And some of the money that we manage is, a lot of money we manage is retirement money, which doesn't matter. There's no taxable right there. But some money is non-qualified where taxes matter. So I love taking little losses. I don't love losses, but I don't mind taking those little losses because I know we can use to apply that against the big winner. So just keep that in mind. All right, so that's step number 4. Look for new portfolio candidates by screening based on fundamentals. What am I saying here? Group by sectors. Group by sectors. Yep. So I look at, you know, based on, I'll go through and I'll set the fundamental scans for technology stocks, consumer discretionary comms. I'll look for particular fundamental and technical setups that become candidates for inclusion in the portfolio. Add new names to the portfolio and weight them within my target sector weightings based on step 4 or step 3, I should say. Okay. So we then find the stocks based on the scan, either, you know, their existing names are going to increase, existing names are going to decrease, names we cut, and then the new names that I'd like to add to the portfolio. And then if I've earmarked, let's say I think the stock market's going to rip into the end of the year, I might kick, you know, our growth technology exposure up to 32, 33% and find the 12 or 14 tech stocks that belong in my portfolio and weight them accordingly. So that's the kind of way I do it. And then step 8 is pick your head up 7 days later and begin the mental recovery process, because this process is massive. All right. Okay. So that's that. If you are not a client of Inside Edge or not a client of Savvy Trader, which is our Active Opps portfolio, which is our speedboat portfolio, here's how you can get involved if you like. It's you know, the full. Actually, no, this is portfolio investor. Sorry, I'm blowing the pitch here. If you want full access to our wealth management experience without actually giving your money over to Schwab for us to manage, you can get full access. Just email us info@Inside Edge Capital. Like, you can see all the portfolios updated in real time. Kyle will take you through a financial plan. So that's available if you just don't want to, you know, give up control of your account, so to speak. So that's a very good option. We have clients doing that. This is the one. This is Savvy Trader. This is Active Opps. This is our speedboat portfolio that I showed you. So this is great. This is just a very low cost way to get involved with a company. It's $300 a year. It's $25 a month. You can follow along. You get push notifications, app notification. You know exactly when I make a trade in here. This is the one that I showed you earlier. So it's insideedgecapital.com/join. And it's actually an awesome tech experience. I completely replaced trading analysis, my company, 12 years with this, and it's working beautifully. So insideedgecapital.com/join. It literally costs $300 for the whole year if you want to follow along in trades. Okay. If you're a client of Inside Edge, you get this for free. All right. I think that's going to be it. All right. Normally I have Kyle here. I knew this was going to be a big one. So I said, let me just take this one, and he's good with it. He's fighting a cold, and that's going to be it. So hopefully that was helpful, guys. And I wish you guys a good rest of the week. I wouldn't be surprised. You know, we have Apple and Amazon probably out any minute. Oh, let's take a look. Are we out? Are we out? Let's see. Let me bring over Thomas. Yeah. I know. I know. Jake just reminded me I gotta go get I know. MSFT. Let's just see. Hang on, let me just see if we're out here. I'm just formatting these charts real quick, okay. You'll recognize that chart. That's the VIX chart I showed you. Is that really frozen? Unbelievable. Let's go. Toss is frozen. Awesome. Settings. I'm doing terrible with this. Shouldn't I be able to? I don't know how to do this anymore. Forget toss. Let me go. This shows you how much I trade now. Deep view. Let's go over here. Single. Let's go 5 minutes. Let's take a look at MSFT. Or sorry, what am I saying? APL. We're going to go settings. We're going to extend it. So Apple is not out yet. Usually Apple comes out at closer to 4:30. See if Amazon's out. Ooh, Amazon's definitely out. Let's take a look at Earnings Hub. Amazon. Wow. Amazon reported 180 billion on 177 expectations, $1.95 and $1.57 expectation. Oh, wow. Okay, so we have a pretty good beat on Amazon. Interesting. Waiting for Apple. How about Gilead? Gilead is down a little bit. Popular. Let's see what else is out. Oh, Coinbase is not out. MicroStrategy, Reddit's coming out. Roku, First Solar, Twilio. Oh, Twilio. I've been watching that one as well. Twilio's up 6.86 after hours. Okay. So waiting for Apple to come out. And looks like we're looking for 101.83 billion, 175 EPS. We'll see what's happening there. Is Amazon turning down now? They are not. No, that's good. Okay, nice after hours move there in Amazon. Okay. All right. We'll leave it there. And guys, thanks so much. And I will see you guys next week. All right. Take care and see you soon.